in tune from what we went over yesterday. There's a setup GBP USD that actually ended up playing out really nicely that I do want to go over. So we will touch on that. For people that have never been on this call, you're going to hear the same thing over and over. Welcome. My name is Lex. I do have a partnership with Surge Trader. My educational platform is Flex Trading, and I'm here to just come in here and give you guys weekly outlooks, weekly gems on the economy, on fundamentals, on technicals, on market outlook, and then just little things and techniques to help you kind of overcome some of those psychology, fear blockages that are kind of hindering you from being able to execute. And I think, if you're listening to this or if you're going to come back and watch this recording, I think there's one thing that every single trader can kind of attest to, which is like psychology is really difficult when it comes to execution, right? Like it's really easy to read the market. It's really easy to say, hey, trend line here, new high here, new low here. But what's really hard is getting into the live market and executing, understanding what it means to evaluate price before taking your profit, right? Evaluating price in the sense of, is this an area where, I should take all of my profit, or is this an area where I could just scale out, maybe add entry as well, and continue to let this thing run? So you have to have the discernment of price action, right? You have to have a system that keeps you in a process, right? In a 1, 2, 3, 4 kind of, method. This thing is really redundant. It's really methodical. So that's what I'm here to kind of, provide on these live market sessions, are not only analysis, not only technicals, but to give you guys just some tips, ways to hinder, all the unnecessary thoughts that arise if you've already lost money in trading and you're trying to get back on your feet, or things like that. When you go to take your next trade, over time you'll develop this sense of, where's this fear coming from, and you'll be able to locate the root of it, and you'll see that it's not really attached to your trading today. It's probably attached to a loss from a couple of days ago, or a loss you took a year ago that was painful. So the best thing you can do as a trader, and what great traders do, is they have short-term memory loss. They keep their risk under control, and if they lose, they were okay with that risk, they accepted it, and if they win, that was the outcome that they were willing to have as well, right? You got to be okay with the risk, and you got to be okay with the reward. So let's get into this market. We got a lot of activity going on. Forexfactory.com, guys. This is where I find all of my fundamental news releases. Yellow folder, low impact; orange folder, medium impact; red folder, higher impact. And you can see that today's Wednesday, December 13th already, guys. I started these market sessions with Surge on August 28th, and to see that we're already December 13th just goes to show you how quickly, when you're in the routine, when you're in the flow of things, when you're loving what you're doing, time just flies by, and it's kind of crazy. It's almost 2024, so you got to find ways to level up your trading. But here we are. GBP had 2 a.m. red folder. So I personally was in a GBP USD sell from the time that we reviewed it in yesterday's session. If you did not catch that, definitely go back yesterday and watch the session, just so you can kind of piece these things together, guys. It's not all about making profits. Sometimes it's just really important to, if there's a leader, a mentor that you really kind of lean into and you trust, and you resonate with their trading style, and you see your trading style within theirs, then it's okay to listen to analysis, right? Just don't take it from too many places. But go back to the previous videos, whoever it is, watch the before, and then come back and study the after, and kind of take yourself through the entire process as what it would look like if you were actually to take this trade. And it's not all about pushing enter on MT4. It's not all about placing the lot size. It's also about the pregame routine. How do you approach the market? Like for me, my routine looks like this, and it looks like this every single day, unless I have days where I'm a little out of alignment, right? And those are usually not the days where I trade my best. But every single day I wake up 5:30, as hard as it is, and I go to the gym at 6. And at 6, I'm starting to get my endorphins going, because I need to get moving, right? I need to wake my mind up. I need to have all my wheels turning, just so I can make good decisions, so I can stay in my discipline. So I have a pregame routine that I have to get done before I really trade, and throughout my trading journal, because in your trading journal, guys, which is the reflection of the trades you've taken, You should be analyzing your psychology when you approach the market. You should be analyzing the technicals. Those are two different aspects. So when I look back into my trading journal, I see that my best trading days are when I really do my full routine, which starts at 5:30 in the morning. All right, that's when I do my best. That is when I'm clear. That is, I love waking up. I love being alert. I don't want to roll out of bed and get into the markets. Like I used to do that. That used to be a thing. I used to wake up and immediately want to get in the markets. But I was a high level athlete, and as a high level athlete, what do? They do the same thing over and over, which is routine, because you're building a habit in the process. All right, don't focus on the profits, focus on the habits in the process. It's going to help with the execution of trading, right? Because there's a set of rules and disciplines that you have to really follow in order to trade. You got to know when you want to exit. You have to know why you should exit if you need to cut a loss short. All of that. Or if you're just over leveraging, you need to say, "Hey, oh my God, I'm in this market. I'm feeling fearful because I'm over leveraging." Well, are you over leveraging in the sense of this is a level up and you've been profitable? Or are you over leveraging because you lost money and you're trying to get it back? Those kind of things. All of these aspects go into you as a trader. So you got to be aware of all of your decisions and all your habits. All right. 8:30 a.m. we had USD as well. 2 p.m. we have USD. So this is one of the important fundamental news releases that I mentioned yesterday. I mentioned CPI, FOMC, and NFP. And FOMC is today, guys. So some of you guys probably don't even know what FOMC is, and if you do, that's awesome. If you don't, all FOMC is, guys, is it's a decision that Jerome Powell makes to either hike the interest rates or lower the interest rates. And interest rates are just things like you might pay $70 a month on your credit card, right? But it might go to $82 based on hiking interest rates, right? And that's a way to curve inflation, which means your dollar is losing value, right? So you're starting to see your prices of gas go up, right? Gas is like almost $4, and that's for regular, diesel and all the other stuff. That's way more. So important to understand that those news releases are important. So 2 p.m. is something to look out for. Something that tends to happen preceding FOMC is you'll start to see a little bit of consolidation and the market will slow down. And we might see movement. We might see crazy movement. There's been times I've seen a 100 pip candlestick, and there's been times I've seen it not move at all, and it just kind of wick up and down, make small doji candles and do nothing. So it's something to be mindful of. If you're already in a trade and you're away from your entry, why not just move break even? If you are not in a trade, make sure you're taking your trades ahead of news. If you're looking to trade, don't enter on the news, right? Let the news close, let it tell you. If you're looking to still continue to trade after the news, all right? I don't trade on news. I'm either in the trade, already break even, I'm getting in the trade way before the news, or, I'm getting in after the news already tells me, the data I need. Because if we're hiking interest rates, immediately I know that my GBP USD, my Nasdaq, my stocks, NAS, USP, US 30, S&P 500, those will go down. All right, those are your 401ks. Those kind of things will go down. All right, so immediately, every time, guys, I've been trading for 5 years. Every time FOMC drops, it's like it goes up, the market will push up in the beginning of the candlestick and then just wick and come down. It's a trend I've seen because we've been in a phase of hiking interest rates, right? Because inflation's out of control. So definitely keep that in mind. We also have 230 USD red folder. Still a continuation of FOMC. And then we have odd. So we have a lot of folders, guys, which to me indicates a lot of good movement coming in the market. But 730 is odd red folder. So if you're trading any odd pairs, odd USD, anything like that, this could be an important time. So let's go ahead and get over to the charts really quick, guys. So we're going to start with the DXY because I think it's important here. So at the DXY, you can see, guys, and I'll touch on GBP USD and break it down of the call out yesterday. But it's Wednesday, it's middle of the week. I like this, but I do have the awareness that it is Q4, so we're pushing up against holidays, and you tend to see a little bit less volume, a little more choppy movement, but it doesn't mean you can't take trades, right? It doesn't mean you can't place trades in high probability areas, such as at resistance levels if you're looking to sell, at support levels if you're looking to buy. All right, I should always be selling high and I should always be buying low. That's how you optimize risk to reward. So here's the 5 hour. We have a low, we have our lower high, also 5 hour LLOD, guys. All that stands for is last line of defense. And that basically means in order to maintain this bearish structure, I just got to trade at it or under it. I don't want to break above it. And you can see currently that we have created this new low. Price is pulled back to this 5 hour last line of defense, which I got to continue to wait, right? Like we reacted, and if I didn't catch entry here, I'm not looking to enter at this low, right? I needed to pull back a little bit. But you can see we have one hit on this resistance level, which is my last line of defense, and we have a second hit, and you can see we're just kind of pushing away in order to really validate the direction of this trade. And I'm talking, this is going to be a swing move as long as everything plays out, right? This is TP1, and I'm sure TP2 is probably somewhere down here. All right, if that's the case, I'm not in a rush to try to predict the movement, right? I'm analyzing such a high time frame. I consider 4 hour, 5 hour high. I'm analyzing a higher time frame, so I'm looking at a bigger move, which means when I toggle down into the 1 hour time frame, guys, that means I'm gonna have entry opportunity. So I'm not gonna miss the move just because I haven't caught it at the very top, right? Because that's a little more predictive for me. I'm a reactive trader. I'm just better that way. Every time I predict, my psychology tends to fluctuate and kind of talk to me too much, right? Versus getting the data and then I react. I'm much better. I like overabundance, and I'd rather actually be a little bit late with a bigger stop loss in certain instances. And then there's times where I scale in on the 1 hour and I have 10 pip stop loss with still the 100 pip reward, right? And those internal movements are where you get paid amongst these swing analysis that I'm doing. So here it is, rejection, rejection. So in order to really, truly head to these lows, guys, back to these 4 hour lows, new lower low down here, I have to break this level, right? This is a key support that was established in this pullback. So the moment I break there, I'll hop in on the lower time frames, such as 1 hour, 30 minute, and I'll find some sort of scale in here to take the trade. So now when I enter, I can have 10, 15 pip stop loss with a hell of a reward. So this is what I'm looking for on the DXY. If we do not break this level, guys, if we come here and we reject again, that's not a broken level. Don't try to pick at the level. Let it tell you if it's going to break. All right, you get the break, and then on lower time frames, you go ahead and toggle down to see. All right, super important. But you can see we're still holding structure. So as of right now, it's a waiting game for me with the DXY. I do trade the DXY. You can trade it. If you don't, you can just use it to build it into your edge, such as, correlation wise. And I've gone over correlations in almost every video, I'm pretty sure. So definitely watch the playbacks. I don't want to be a dead horse just always talking about the same thing, so I'm trying to switch it up. But there are correlations in this market that you should know. And DXY is one that is heavily correlated with the Euro USD and USD Swiss franc. So right now we're still rejecting holding structure. And I'm going to go to GBP. And this was a really quick, very quick movement. And I took my profit here right at this bearish bullish candlestick pattern, because that's just, you don't always got to go all the way, and this is where I tell you guys that over time, through experience, through putting skin in the game, through back testing, you'll start to develop the discernment of, do I want to take my profit yet? Do I want to let it run? Do I want to take profit, leave a runner? Do I want to just scale out entirely and just go about my day? And so understanding that FOMC is coming, and these are the kind of movements that are just super predictable after seeing this news release for 5 years, you can see that price created that new low, and this is what we discussed yesterday. When I am in a bearish market, and I'm going to slap my confirmations up for you guys again today. I'm feeling generous. It's the holidays, so I got to give you guys some sauce. Let's see. All right, so these are my confirmations, and you can see I just have them saved as a template, guys, because I'm not doing anything different. It's the same thing for me over and over. So you can see we had the new low, and this is on the 1 hour, so this is more of a intraday move, but I understand I'm in a 4 hour higher time frame pullback right now. New low, beautiful, and these are structure confirmations. These aren't entry confirmations, these are structure. New low, Pull back, beautiful, 50%. If I chop this in half, this push in half, that created this low. You can see that I have beautiful price action at that level. I have a break in retouch, so that simply support turns into resistance. All right, so low, lower high, lower low, lower high, beautiful. EMAs, new low beneath my EMAs. So immediately I have all my structure confirmations. That's what I need to see. So now let's take a look at what's important for me in order to get into this market. So to get into the market, to catch a sell movement, I need to be looking to sell at resistance levels, which means, guys, I need to see this price action pattern established at the highs. So when price pulls back in my 50% area, that's when I start to actually entertain the idea of resistance. So you can see here, we had resistance because we had the bullish bearish close. All right, price is just kind of dancing. So I understand that this is an area of interest, right? This is my last line of defense. When price wants to go bullish, it'll break that structure, but it didn't. It held. Price came here and wicked. I think this wick actually happened while we were on the call. I literally placed the entry right in here off the wick yesterday. And then I just let it run. Like, it's not a big entry. If it's earlier in the week, I tend to throttle my lot size back. But this was just a great entry. And then you can see that we fell. And GBP USD, the reason why you can take your profits when you want to is because it actually hands out a good amount. If you look from this entry to here, that's 75 pips on a standard, right? And on a standard, that's pretty good movement. So here it was, 75 pips. I'm really aiming to get back to TP1 down here, but I understand that FOMC is coming, and maybe I'm just not patient enough, but I was okay with that profit, so I took it, right? So I took the profit, and now, yes, does it look like we can probably just continue to fall into here? Absolutely, absolutely. You can see that we broke this support level here, created this high, new low here. Price never came back above this high in this internal movement here. And you can see that we're still just kind of dancing. And again, guys, I told you that like preceding up to FOMC, you tend to see just a little more sideways movement and a little bit of consolidation. So I'm curious to see, does it just kind of trickle into this level? But I took mine just because, why not? It's going into the holidays. It's Q4. When we're like in the Q1, Q2 going into Q3, man, the market just trends beautifully. So I know for a fact that we probably would have already been at TPs on GBP USD, but I understand volume and Q4 and all that stuff. But it doesn't mean you can't take trades, guys. You can still make $750 in the morning and be done. All right, it doesn't have to be the home run, monthly swing. If you are interested in that, though, I will say Brandon is a great higher time frame monthly swing trader. I am not. I am a 4-hour swing analysis with 1 hour intraday kind of skills. All right, so here's USD CAD as well. So check this out, guys. Same thing. Notice how the DXY, I'm going to mark this. DXY and USD CAD look the same. Look at this. They look the exact same. This is my last line of defense on USD CAD, right? 4-hour, low, lower high, low. My lower high is always going to be my last line of defense, all right? And this is just simply means that, hey, if price is going to maintain the bearish structure, then it needs to either trade at the level or it needs to trade underneath of it. It shouldn't be trading above it. The moment it does that, I've created a new high. I shouldn't see new highs when I'm looking to go lower. So here it is. Price pulls back. We're not breaking this level, and here we are just printing bullish bearish here, and now we're headed back for this key level of support, right? This key level of support is important here. Same thing on the DXY. We saw that support level hasn't broken yet. Notice how price ran back to this range, and I'll even place it here where the bottom of the wicks meet. Notice price ran here and it just rejected. Bearish bullish right on a support level. It shows it's not ready to go. We have this wick, runs back to this resistance. So we're in this middle of this range right here at this last line defense. Usually this is by design, guys. This is not a coincidence. But to really get down to this low here, to USD CAD, right in here, we need to see this level break. We need to see this support break right in here. So I'm going to even drop down lower for you guys. And look at this wide range of consolidation. And you can take sells at these resistance levels, guys. That's high probability areas. Sell here, stop loss here. 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 You're making profit every time. It's just a matter of trade management at that point. Do you move break even after that? Because you understand that you're at the top of a pullback on a 4-hour movement. You're in a consolidating phase. You haven't broken the main support level yet. Do we come here, boom, and catch this entry? If we do that, we're going to see a beautiful swing move into these lows. And again, high probability. So it's a waiting game. Let's see, can we finally break this level, guys? I sent this to my group probably like 2 weeks ago. I sent it in here. So so about a week and a half, 2 weeks ago. And nothing's happened, right? Just nothing, no movement. We've just been sideways for how many days? 7 days. So so about a week and a half, 7 days. And well, I sent it a week and a half ago, but it probably was more like in this area of this pullback. But you can see that we are just creating a lot of resistance here. I do think that this could sell off. It would be beautiful to maintain the structure and keep going, but I don't know until I really get that confirmation. So when I get to this level, if I am in the sells right in here, it's important that I understand, okay, it can reject here and bounce back up to this level. But it's up to you. How much of account capital do you risk per trade? So I don't always go by percentage, and this is something that I don't think anybody has the master guidebook on how much to risk of your account. A healthy amount, if you're trying to become profitable, is anywhere from 0.51 to 1.5% of your account. I think that's a comfortable amount. I don't go by percentage though. I tend to go by dollar value. So let's say I have $50,000 in my account and I don't want to risk more than, what am I comfortable with today? 400. Like I might be comfortable risking 400 today, and tomorrow I might be comfortable risking 1,000 in my trade. So for me, it's anywhere that's how I'm feeling, how much I want to accept for the risk, number one, but it doesn't fluctuate. I don't hop from risking 400 to 10,000, right? That's not how it goes. I might risk 400 and then say, okay, all right, risk 400 and I made 800, right? Now I might only risk 600 of the 800 I made. So now I'm only risking equity, right? And now I no longer tap into principal. So you also need to kind of understand your flow of how much you're willing to risk and then how much are you willing to risk after you've made that money? Are you willing to risk that equity and that profit you've made with the principal? So you add that together, or are you just willing to risk only the profit you made so that your principal is always protected? And I think all of those kind of strategies are going to separate you from unsuccessful trading, because you got to have all of these little nuances down so that you can understand yourself, so you can understand how to manage your trade. This isn't just get in and let it do whatever. Like, you actually have to look at this and go, okay, we're good holding this level, respecting it, but making sure your psychology doesn't lose itself. So that's why I say you can go for 1.5% of your account, or you can risk dollar value, and dollar value is fine with me. If I have a $10,000 account, I'm truly, knowing me and knowing my trading style and how long I've been doing this, and I understand that I hit my trades. My analysis is crazy. There's days I'm cool with risking 1,000. There's days I'm cool with risking 4,000 to make 8, 10, 12. Like literally, it just depends on how I feel. But don't make it a drastic leap in numbers. Keep it in a healthy range, which I'm sure if we averaged out how much I'm comfortable with dollar value wise, it'll probably average out to the 1.5, 2% range. Just really important, guys, that you understand yourself. I love questions like that. But I'm always going to flip the mirror back to you and go, well, what are you comfortable with? How much are you comfortable with? You might not think like me. We might think totally different. We might go about life goals totally different, everything. Like our approach, you might be a lot more laid back, and I might be just super, super fiery, or all of these things go into place. So find a healthy threshold of risk that works, which is in the 1% range. And then, or try dollar value. What's better on your psychology? 1% just, I don't like it. I was just cool with saying, all right, if I lose 200, 300, then all I do is multiply my lot size by my stop loss. That's it. And then I'll know how much I'm going to lose. Forex pip calculator on Google. And that's how I do it. And, you know, that's really all you can do. And then once you've accepted that, you got to get in the market and just accept it as that. And whatever the outcome is, the outcome is. But for now, guys, I'm going to wrap this up. We've been going for 25, almost 30 minutes. USD CAD is one, you know, just follow. You know, you don't got to trade it. Just go in here and follow it. Just look, say, hey, do we break this support like that Lex talked about, or do we continue to reject support like Lex talked about? We can find our answers probably today within FOMC. So let's just be patient and see what happens. But with that being said, guys, go read books, go listen to podcasts. Don't spend your life looking at other people's life, right? That's really boring. Go grow yourself. Go nourish your mind and stuff so that you can be a really good trader, because all of that goes into play. Get rid of outside influence that's not conductive to what you're trying to do. You know, you got to be selective. You got to be choosy. So, guys, with that being said, I will catch you guys later. I will be on next Tuesday as well. And then we have some holiday travel going up. Still going to do it. Just going to be in different locations. But super excited. Thanks for getting on. And I will catch you guys next week. And peace. See you guys.